How you doing?
Okay, awesome. Hi, Yousif. Thanks for joining me today.
Sure thing.
It's Mortgage Monday, so I know you're quite busy, but I thought this would be a great time if you could please to spend some time with me and some of my clients and prospects and answering a few questions.
Looking forward to it. Let's do it.
Awesome. So over the last week and a half, I've had roughly a handful or so of inquiries about FHA. So I thought we could do like a quick, 5 minutes or less rundown that could really help people decide if that is the mortgage vehicle that they should pursue. So how about right off the bat? What exactly is an FHA loan?
Yeah, absolutely. So let's talk about that. So FHA is a really cool program. Stands for Federal Housing Administration, and it is essentially a vehicle for the most part, first-time home buyers to purchase a property. There's several pros and a few cons to an FHA loan. The main pro for an FHA loan is twofold. Number one is that you get to put down a 3.5% down payment on a mortgage, and also the fact that you get to if your credit isn't as up to par for a conventional loan, FHA loans do go down to 580 for their credit scores, and they also allow for less than stellar credit histories. So in some cases, while clients may not be approved for a conventional loan because they don't either meet the 620 requirement or they do meet the requirement, but they have a less than stellar credit history, aka late payments, charge-off collections, things like that, a lot of times FHA will take that loan as opposed to conventional.
Okay, great. Thank you for sharing that. So let's expand on that a little bit. Um, what are the advantages of applying for and purchasing with an FHA loan?
Yeah, sure thing. So the number one advantage is the fact that you do get to put that low down payment at 3.5%. The same thing we just talked about, the advantage of the lower credit score and lower credit profile, but also in most cases, FHA loans do come with lower interest rates than conventional mortgages, depending on the borrower profile. Now, their rates are historically low all across the board right now, but even so, for example, if a borrower was in that lower tier credit, maybe they had a 620, 30, 640, something like that, they would 99% of the time get a better interest rate on an FHA loan versus a conventional loan because of those loan level pricing adjustments. They're called LLPAs that we have. So the LLPAs for FHA loans are much more forgiving for lower credit tier borrowers than it is on a conventional loan. So if you have anything under, let's say, a 660 credit score and you can afford to use an FHA loan because maybe you're buying a single family home or an approved FHA condo, you're going to get significantly better pricing on an FHA loan versus a conventional loan. That's probably the biggest benefit to borrowers in deciding which kind of vehicle to use, FHA or conventional.
Okay, so can we take a little closer look at any fine print that there may be there, so to speak? Is PMI mandatory with an FHA loan?
Yep, that's correct. So every borrower that takes out an FHA loan is going to have private mortgage insurance, no matter what your down payment's going to be. As opposed to other regular conventional loans where if you put 20% down or more, you don't have PMI, or if you reach 20% equity in your property, you don't have to pay that private mortgage insurance on conventional loans. FHA though, you're going to have private mortgage insurance for the duration of your loan. So,
Okay.
so that's part of the five print. And just to add on top of that, which I think you already know, but for your viewers is you're going to have that private mortgage insurance month over month put into your monthly payment, but you also have to pay a 1.75% fee
Mhm.
into your loan that's rolled into your loan called upfront mortgage insurance premium. So it's labeled as UFMIP. And that 1.75% is built into your loan. You don't have to pay it out of your pocket, but it does increase your loan amount when you're borrowing FHA loans. So if you're putting 3.5% down, let's just keep it simple. If you're borrowing a $100,000 loan and you're a $100,000 condo, you're putting 3.5% down. Your loan amount should be $96,500, but it's actually going to be $96,500 plus that 1.75% fee. Right, so it's going to be somewhere around 97,000, $98,000, which your actual loan amount is going to be when all is said and done with an FHA loan, because we're adding that upfront portion.
Are there any other fees or points to be aware of?
It depends on what kind of interest rate you do want to get based off of your credit profile. So as with any loan, typically speaking, borrowers will get the rate that's at par. Par means what the market rate is based off of your profile. So let's say, for example, the market rate based off of your profile is a 3%. That costs you $0 or 0 points. But some borrowers might say, well, I'd like to get a 2.5% rate. How do I get there? Well, in that case, they may have to pay a little bit of money towards their points, depending on the rates that day and the rate sheet, and vice versa too. Some clients might be at a 3% and want it to go to a 4%, but they're going to receive some money back towards their closing costs and their down payment. So they might say, you know what, I'm not worried too much about my monthly payment, and I actually want points back to me as a credit as a buyer. So let me see what a 4% rate would get me. Maybe it'll give me $2,000, $3,000, $4,000 back in the form of a credit, right? So
And
it's an option.
that's something you do. You kind of run and advise on the scenarios, right, as to whether or not, based on their entire financial profile, whether or not a conventional or the FHA would maybe work for what it is they're trying to achieve.
Exactly, exactly. So we sit there, we decide which program is more suitable for the buyer, depending on most important, which is the buyer's profile. But then we dive into what kind of a property they want, and then how that property is going to work with each different respective loan program. If it'll work with one or not work with one, we kind of see which one would be best for the client based off of our past experiences and where we would see the client getting the best terms.
So this is a perfect segue into my second question, getting right into property type. I specialize in condos. We do a lot of condos together. So from the seller and condo association perspective, what do you see? Because at least in downtown Miami, there are very few condo buildings that accept it, and they tend to be older. Can you speak a little bit to that in terms of, what's the acceptance rate, by sellers and by associations? But maybe if you could also tell us a little bit about the process too. Is it longer to close?
Yeah, great question. So we do specialize in condos here in the Brickell, Edgewater, Midtown area, just like you do, Bernie. So it's important for us to create a very smooth process for our clients, and part of that is letting them know and educating them on the condo approval piece. That is a very important and overlooked piece for a lot of different clients, realtors, and lenders alike. Getting a building approved for financing does take a decent amount of legwork from all parties involved, and can be a very lengthy process if not approached properly. So we have to make sure that before a client puts any of their own money on the line, we know exactly what we're dealing with in terms of the condo financing. So we need to collect certain condo documents upfront from the association, because alongside a client's credit, income, and asset approval, we also have a building's credit, income, and asset approval. When it comes to FHA condo approvals versus conventional condo approvals, FHA does require a lot more documentation and does have a lot more strict guidelines, rules, and regulations that have to be abided by. And the process is much lengthier as well. So for example, when we do a conventional approval, we just need 3 documents: the condo questionnaire, the condo budget, and the condo master insurance policy. Based off of those 3 documents, we can determine with very quick analysis what the approval is going to be, because the approval actually comes from lenders, not from an entity initially. We have the authority to approve buildings. On the flip side, with an FHA condo, we have to collect a much longer list of documents to document certain things like commercial spaces and delinquency rates and how many FHA loans are in the building right now, et cetera, et cetera. And then once we collect all those documents, we can't just approve them on the spot. We need to send it up to the actual Federal Housing Administration, and they're the ones that review those documents. And as with any administration and any housing authority in general, their turn times are typically not as quick as you'd expect from local people or local lenders or local individuals, because they have not necessarily any type of stake in that particular deal. They more so put it into a queue, and they might have certain questions that might have to get bounced back and forth. So that's the reason why you don't see too many buildings FHA approved, simply because they have a ton of overlays, a ton of documentation. There's a lot of work that goes into something like that. So the only time we dive into that type of a program for a borrower is if it was definitely needed, because you're going to need a lot of time in advance, and you're going to want to make sure that it's going to get approved, which takes a lot of investigation.
Right. So I'm going to overstep my three quick questions and just close this out with this really quickly. At least from the volume that you do, what percent of the financing that you actually approve and close, very, very rough, is maybe FHA versus conventional for condos?
I would say we're 95% conventional and a 5% FHA.
Okay, great. Thank you for that. And then just to bring it all home and tie it together, I think there's this concept that's been marketed to us, and a good one depending on where you live, that FHA is particularly great for first-time home buyers or in general because it's less. But close us out in your words as to why, especially with condos, conventional may truly end up being the way to go, and why to maybe not be so intimidated by it.
Yeah, great question, Bernie. So I think conventional loans are the best use of a program when it comes to condos, because not only can you put down 3% instead of 3.5% with an FHA loan, you also, if you have a good profile in terms of credit, you will see better rates on conventional loans for your particular deal. And you'll also get a much easier approval process, because we'll know exactly from the very beginning whether or not your building is approved for your particular down payment needs. With FHA loans, they're something that you want to consider as a backup option, especially when it comes to condominiums. If there's a specific reason why you need to use an FHA loan, you may not know that you can actually use that rate. There's not a stopping point for you to do a conventional loan. So make sure to consult with us and decide, why is it that I want to go FHA? Is it a perception of a first-time home buyer idea, or is there a certain reason or limiting factor that's pushing me into an FHA loan that may require some research and attention? Because 9 times out of 10, or from what I just said before, 9.5 times out of 10, I think, conventional loans are the way to go, and the way that we process our condo loans for our clients, and create that five-star experience for them.
Fantastic. Thank you so much for your time today. And as per usual, for the clarity and, really just making this simpler and easier for people to digest in what can be a little bit of a heavy and a laborious decision to make. I look forward to more future transactions with you. Thank you.
Great to see you, Bernie. Thanks a lot. Have a good one.